Happy Friday, everyone.
Happy
Welcome again.
Friday.
Happy
Happy
Friday.
after happy after Halloween. So
Yes, yes,
spooky market.
absolutely. It was a crazy week, and one more to go. One more week. Next week will be very interesting. Um,
Yes.
so I think welcome, guys. We wait a few minutes for everyone to join. Today, we're gonna have a very interesting session. We're gonna show you. We're gonna do a recap of the earning week. We had some really great earnings, some really great releases this week. And then we're going to show you a model that we built using our swing trading model. We're going to go through some back testing. But before we start, as always, let's share our disclaimer. All right. And before we go into the details, we have a really nice event coming up next week. So a lot of you have asked, oh, we would love to do a live trading session with you guys. We would love to see how you apply the data in real time. And next week is going to be the perfect occasion. We're going to have, obviously, the 2024 US presidential election on the 5th, and we'll be doing a live event starting from Monday. So if we scroll down, here's the schedule. Excuse me. We're going to start on Monday with a market preparation. Then we're going to do another trading preparation on the November 5th. And then we're going to start a 3 hours live trading session at 10 p.m. while we wait for the results. And then we're also going to do a trading preparation and live trading on the following day. And then on the 7th, we're going to do a trade recap. So we're going to show the results. We're going to look at mistakes, things we did well. And then obviously on the 7th, we also have the FOMC meeting. So I think, Patrick, you thought it was a great idea to then continue doing like some trading during the FOMC meeting. So overall, it's going to be just over 10 hours, maybe more. Let's see how the session goes. Let's see what happens with the results. So we'll see how the price action reacts. So the goal of this session is purely looking at the markets, looking at price action. And then, Patrick, like I'll pass on to you. You'll be the person live trading next week. So
Yeah, all right. Yep. So we starting on Monday. This is the November 4th of market preparation. So what does mean? So we're looking in first into our charts in the futures market, also in the stock markets, and in areas who are really important. So we're working with the mentor Q levels. So we have the blind spots, we have the gamma levels, we have the swing trading models. We're working also with the GAGs and the NetJax matrix to see how mentor Q can help us, and then we map out all the liquidation area, what is really important. So on November 4th, this will be some event was really important where we're going into how to use mentor Q on real markets, and then how we can prepare with mentor Q for big events like what we have now, the election. And then on November 5, we're looking also in the intraday data specific for our setup, where we're looking for when we have the live trading session. So this is a preparation for the live trading session. So what are the key areas where I personally look for, where I'm being more bearish, where I'm being more bullish, and what are my liquidation area and everything like this. So we have also and really a deep dive Q&A. So where I want that everyone works together. So the main goal of the session is definitely that we're working as a team, so that everyone goes out and can say, okay, the best case everyone was profitable. Everyone is meaning 100%. Or that you was learning really good things, that you know exactly how you can use mentor Q now in your trading, how you can use mentor Q to become a better trader, how you can use mentor Q in your future when we have other events like FOMC, like CPI, or doing regular market sessions. So the main goal is that you grow as a trader, maybe with profits, maybe with knowledge, but the main goal is that you go out after these days and say, man, this was a really nice experience. This was awesome. This is my main goal, what I want. And in the live trading sessions, of course, I will share my stream with you that you can see where I go into the market, where I go out of the market. I will explain all my setups, what I'm looking for, why I'm going into the market. And of course, with commentary, Fabio is also there. He's always be there. He will speak about the levels. He will help you if you have questions about everything what is meant to Q related, swing trading levels, Q models, everything what could be really important on this day. Fabio will cover this from the mentor Q session. I will cover this from the live trading session. So this is really a group mentorship. This is like you get everything what you need to become with mentor Q, I would say, a better trader after this event.
Yeah.
And this is the main goal, I think.
Yeah, and I think you will be trading futures mostly, I guess.
Yeah, futures is my my main thing
Yeah.
because of the liquidity. I will trading also my my private account, so I can move a little bit more. So yeah, so we want liquidity, we want big moves,
Yeah.
and I think we will get it.
Yeah.
Yeah, let's see.
So to join the event, you will need to have access to the Premium Academy. If you are not part of this, we just share the link for this link, and you can actually join us with the coupon code. Within the Premium Academy, if you have access, you will be able to go here, click on the live trading, and here is where you will be streaming our data. So here is where you will be seeing our live sessions from next week. So we have all the lives already preloaded right here.
But let me add something to this. If I would trade futures, yes, I will trade futures. Can we speak about option setups? Yes, we can. So we have Fabio also there. Can we speak about stocks and ETFs? I was trading long time enough stocks and ETFs. I know exactly what's going on. And as a futures traders, we have always to look also, especially if you trade NQ, ETF, or the Dow, we have also to look into the Magnificent Seven. We have also looking into the stocks. What stocks could be really impact now on the election, where we have to be very careful of. So we will speak about this also. So I would say, yes, I'm trading in front of you the futures, but we will cover also stocks, ETFs, and options because it's the market.
Yeah.
So it would be really stupid if you're looking only to futures. No, we go from macro to micro. So we want first looking to the bigger picture, and then we're trading the futures.
Yeah.
And if you, I see Anna, are you trading during the session next week options or futures? Anna, if you be trading, for example, options, I'll be 100% sure you can learn also something from this session, because we have also Fabio there. If you be struggling with Mentor Cube, with how you should be read something or something like this is the best session where you can go in, because we are live in the market. We can look together in what you see and what we see. So this is like you get a group mentorship in this case, and this is a one-time opportunity because it's election. So I was asking Fabio, hey Fabio, it would be cool if we can have a live trading session doing the election, because people asking all the time, hey, can we have a live trading? Can we have a live trading? And this is now the session where you get. This year, there will be no other live trading session. This is something what I will promise you. This will be the only event this year.
Yeah. Yeah, and it will be a big one. So hopefully you guys will join, and yeah, we'll be looking closely at the market move next week. So should be very interesting, and it's going to be a good way to kind of see how the levels can play out in real time with an actually live trader that will show you how they place their setups during those like events. So any question, please share in the comment. And I think, Patrick, if that's, we'll go back to this one at the end, but maybe we can go into...
No, let's take the recap. This is what we want to do. So let's go.
So let's go into what we did this week. So this week, obviously, we saw a lot of really big earnings events from very large company. So let me just make this bigger for you guys. One second. Okay, just 1 second. Sorry, 1 second, guys. All right. Okay, so just wanted to make this bigger so that you guys can see. So essentially what we did is we took the earnings for this week. So we see a very big company. We started from Ford, then we had PayPal, Google, Reddit, Snapchat, Meta, Microsoft, all of those. It's about 24, 25 companies. And then we went and looked at our swing trading model from Friday. So we took the data from Friday, the 25th of October, and we looked at, and then we're going to show you what the data looks like. We looked if the swing model was bearish or bullish for that day. And we wanted to kind of do the preparation over the weekend. So on Friday, we took the levels and we put also the date here of the earnings date. We put here the date of the earnings date, and then we took the opening price for Monday, the 28th, and we did different strategies. But before we do that, let's go back into our bot and let's see how we actually took the data. So we went into the bot and we went all the way back to Friday, and we took our 5 days and our 20 days model, and we started from Ford, for example, and then we looked at the data back from the 25th. So if you go here, and then what we do is we saw that obviously the upper band means that we have a bearish kind of like bias. We took this price and we added into our backtesting sheet right here. And then we kind of looked at different strategies. So the first strategy is very simple. So let's look at the bias and let's trade at the open of 1028. So if we prepare on Friday, in this case, we go short because we have a bearish bias, and we go long when we have a bullish bias. So we trade at the open price. This is the open price from Monday. And then we took, this is the open price from Monday. And then we looked at the strategy using different scenarios. The first scenario is closing the position at the open price of the stock after the earnings event. So in the case of Ford, this would have been on 1029. In this case, Google, this would have been on 1030. So we took the opening price, and the second strategy would be to close at the close price after the earnings. So in the case of Ford, instead of trading at the 9:30 a.m. on the next day, we close at 4 p.m. Then we look at the return. So the first thing we want to see is the one-day return if we were to close strategy 1 at the open. Here you see, obviously, we have a 5% return on Ford. We have a 27% on Reddit, and so on. So we have some negative returns right here. And then we have the one-day return if we were to close the position at the close price. So looking at the close price after the earnings. So here we have our data. For example, you see here on Reddit, the price closed at 41% on that day. And then simply we do the calculation. And what we assume is that it's an even portfolio. So we do a $5,000 trade for every position, for every stock in this case. And this will show you the profit and loss for every position. So if we go back, the first column is at the open price, and the second column is at the close price. So if we were to trade from the Monday open to the open price after the earnings, our profit and loss would have been for those 24 positions, $2,700, with a win rate of 45% and a total portfolio return of 2% for the week. If we go in choose the second strategy, which is closing using the close price after the earnings, the profit is in dollar value very similar. Our portfolio return is 2.14%, but our win rate is 54% right here. Then we did another exercise and we took the price from this morning. So this is the open price from this morning on those companies. And we look at what if we keep the position instead of closing the day after and keeping it only for 1 day, closing at the end of the week using the open price of today, which is November 11. So in this case, what we see is that our P&L is $2,369, portfolio return 1.9%, win rate for 41.67%. This is great. Please let us know if you have questions. This is using simply going long or going short the stock by looking at the bias from the swing model. But obviously the swing model allows you to have volatility bands. So basically what we did in this case is to actually use option strategies and see how the return could have changed. So if we go back from this chart, we took our different levels, our upper band and our risk trigger for all these companies. And if we go back to the file right here, here we have our upper band for the Friday before we started this strategy, the risk trigger, and here we have all the lower bands going on for all these companies. We did it for 5 days using the 5-day swing model, but we also have a 20-day swing model. So we also use the 20-day swing model in this case. So we took the same levels, we took the upper band and the risk trigger, and we added it here, and then we have our swing trading 20 days. So what we want to do is we want to say, okay, what happens if we were to use those levels to sell spreads? So instead of like going long or short the underlying, what if we are selling options? And we use spreads, so call spreads or put spread to obviously limit our risk. But let's see what would happen in that case. So here we see obviously we have a bearish bias. So in this case, we choose the expiration of 11:01. And in this case, because we have an upper band, we would sell a call spread. A call spread would be, our first strike would be 11.50, which is the closest strike to our upper band right here. And then we took a three strike wide risk, which is 13, so $1.50 in this case. And then we did the same here. In the case of the bullish bias, what we do in this case is we do a put spread. So we would sell a put at the swing level strike, and then we would buy a put at the lower strike to limit our risk. So in this case, for example, we see our lower band is 200. We would sell the 200 strike and buy the 185. And our premium in this case is $1.7. We do the same for all the other companies. So for example, if we look at Google, our lower band is 158. And then our put spread is the closest strike, which is 157.5, $1.1. And then we would then buy back the 150 strike in this exercise. Then we look at the premium. So here are the different premium for all the different spreads. And we look at our risk capital. So what is the maximum risk of this position? In this case would be the difference between one strike and the other one multiplied by 100, so $150. Our potential return in this case would be our premium divided by the risk capital, so it would be 18%, 11%, and so on. So we see here what is the potential for these spreads in that case. And then we look at what happens this morning. So we took the data from this morning. So what happens if you were to sell spreads on Monday at the open and close them on Friday at the open and see what happens there. So as we can see, a lot of these, due to time decay, are worth almost zero. We have some negative positions right here, but overall, we see how the other different premium have evolved. From today, the expiration is at the end of the day, so we will have to adjust that at the end of the day. But essentially here we look at the P&L. This would be the profit and loss if those premium were to go to zero. So if you look at here, the premium is $28. The options today is worth zero, so our P&L would be $28. And this would be our return. So if we go back to this strategy, then we see some very interesting results. So our profit and loss is $1,260, which is a 10% return on the capital that we risk for these spreads, with a win rate of 87%, 87.5%. And please let us know if you have questions. We did the same exercise using a 20 days. And the reason why we did a 20 days is because obviously with the more time to expiration, the premium of those spreads can be higher. So what we want to see is like what happens if we close the position today, but obviously we could keep until expiration, but let's see what happens. So here again, same exercise. This is the expiration for the option, so 11/22. Again, here is a call spread, our put spread, strike one, strike two. Our premium in this case would be this one multiplied by 100, and this is our capital, our risk capital. So what's the maximum we could lose for this spread? The potential return if those options expire worthless, here in this case is 8.67, 50% in the case of Reddit, and so on. And then we look at the premium from today. So here we take the premium of the same spreads at the open today, and then we calculate basically the profit and loss if we were to close those premiums today. And if we look at the final results, our P&L now is $370. We have a 2% return on our portfolio based on the capital that we put at risk, with a 75% win rate. All right. Let me know, Patrick, if you have a question from your side, and let's see if we have any question from the audience.
Yeah, my question is, and I think it's also a question what maybe the audience have. So, how they can maybe copy this? What was the learning? What was the mistakes? What do you think? And you were speaking about the amount of about 5,000. So was this 5,000 each ticker, or as a total? And yeah, so maybe you make some little deep dive into this about the learnings, mistakes, capital.
Yeah, so the idea behind it is really to showcase how you can use the swing model. So we did the first strategies, obviously, is looking at the directional. So if you are a stock trader, or like, if you are like just looking at the underlying and where the underlying can go, so then how can you use this and potentially profit from it? So the first strategy was, okay, let's say that we want to like look at 5 days and we trade at the open on Monday, and we see how that can evolve throughout the week. So the 5,000 is really using an equally weighted portfolio. So here we have the same kind of like size for every position. So that can allow you to say, okay, you diversify the risk across multiple positions in the same way. This is just purely for exercise, just to make it easier, make it simpler. When we look at the option size, we took basically the same sort of like spread, like a 3-wing spread on, if you look at your trading platform, you can do that. And then we look at the premium and the capital risk, and we really calculate the return based on the amount of capital that you could have potentially lost on that trade. And literally, yes. So what we want to see here is, if we go back to our swing model, we did it for earnings because I think it's very interesting to see if the model was able to kind of predict the direction as well as kind of like the bias, and if those levels, even if we were wrong, because there was many different cases where the earnings was not really positive, but the level still held and the position still was in profit because you had a volatility band. So here, another thing that you can do is actually look at the back test on the chart. So in this case, what we look for, and if we take the example of Google, we want to see going back historically, and we have about 2 months of data in this chart, how many times the lower band in this case predicted that the price 5 days in the future was above the lower band. So here we see that for Google in this case, over the past 38 days, we had a success rate of 97%. So the price always closed above the lower band that was sent to you 5 days before.
And also, I think what we can say about Fabio is, if you be an options trader or ETFs trader, it works also for you. So use this as a max stop loss or something like this. So you can play and trade around also with the swing trading models. So if you be an options trader or if you be a stock trader, so it works also for stocks traders and ETFs traders.
Yeah, and exactly. And the second use case was showing you how you can actually benefit from this model by looking at actually how the option premium could decay. So the goal here is really, if you are able to predict that the price will stay within the range, then how can I benefit from that by selling premium? So that's the goal of this kind of exercise. So in this case, we were looking at our bands. So if we go back to Google, we have our 158 and 175. And then obviously we want to look for the closest strike available for that company and how we could potentially benefit from this kind of trade here. So obviously you see here that the option, obviously the price of Google has really gone up since Monday. The option is now worth zero. So you have really pocketed all this premium. So it's $1.10 multiplied by 100 is $110 for this contract. And your risk would have been $750 in case things went sideways and the price of Google would have dropped below the $150 level. So let's actually look at, okay, let's look at some question. Okay, I think, Rajesh, I'm going to answer your question. So basically, no. So the idea behind it is that we looked over the weekend. I put together this file and I put together the list of companies that were reporting for the week, and I used the data from Friday. So the levels date right here, and we're going to share this. We're going to put together a blog post and we're going to share all these results. But the levels date is the data as of the end of Friday. So I would go over the weekend. I would look at the levels. I would prepare for the next week. I would take the levels from Friday, and then my opening position was at the open on Monday. So I've already done my preparation. I already know where my levels are, the bias in the market, and then I would basically use the open of Monday. Answer to Drew, yes, you can absolutely do that. So I did a very, very simple exercise, but the levels update every day. So you can actually, if you wanted to do it the same for next week, you can do the same, and you can just run the tickers right here. So for example, if you look at any other ticker, PayPal, for example, the model would have changed and would be updated for today for going on, and we will have new updates on Monday and so on. So you can definitely run it for the same tickers for the following week, and we can also build more exercise like this.
Yeah, and also think about it. You can use the swing trading models also from SPY, QQQ, or IWM, or the DIA, and then you can use our premium indicator and copy this to your futures. So you can copy basically the QQQ to NQ or the NDX to QQQ, so NQ. So you have the full flexibility. So especially when we have now an event like next week, when we have the election, it's so powerful to have the swing trading levels on your chart to know what could be happen. So remember, Fabi, we was live yesterday for our community members, free for the Q&A in the Discord, and we were speaking about the down move, and there was also the risk trigger from on the ES, and yeah, it's so important that you have this also on your chart for preparation to know exactly where are the swing trading levels are. And yeah.
Yeah,
take advantage of this what you have.
Yeah, and in this case, we were looking at the 1025 data. So you see it right here. This would be the same level that would be on my file. This was the data as of close of Friday. So we use that on the backtesting. But you can get this, right now you can also get the historical data. So you can go back in time, get the levels going back up to 5 days and plot them in your chart and see how they would react. So here we have them all. We can do it on multiple tickers. Yeah. And to answer your question, Shizel, the list that we took was simply looking at the tickers that were reporting this week. So we took basically 25 companies that reported earnings this week, and we just ran the model for all of these. So, for example, you had Reddit, some big cap companies, but we also had like Hood, like Peloton, like Uber, so a lot of different variety of companies out of different sectors. So we took just read the list of company reporting, and you can get that from any earnings calendar, Yahoo Finance, any of those. That's a good question. So the swing model is for 5 days and 20 days. For 0 DTEs, we have our 1 day expected move. So yes, we do have that as well. And we do have some backtesting results of that on the website as well. And yes, these models are available for all our coverage. So all stocks, ETFs, and indices within our coverage. It's about 950 companies. All of that will have the swing models available for you. So you'd probably find any companies that you're trading right in the bot.
But by the way, Fabio, we have this at the moment not for Bitcoin or Bitcoin futures, but we can use technical, the SPX swing trading models and plot this on Bitcoin or Ethereum. So we was doing this many times with the gamma levels, but you can do this also with the swing trading levels. So if you want.
Yeah, absolutely. So what we do here is we take the levels, we take our swing trading levels for SPX, and then we go into our chart, put them in the indicator, and then scroll down and you will see our conversion settings right here. And then if you type in BTC, in this case, you have the option to do an auto ratio or a manual ratio. Just let's leave it auto for now. And then if we do our BTC USD, then now you have basically the levels converted from SPX plotted on Bitcoin. And obviously look at here, there was a good reaction a few days ago.
Yeah, we have the risk trigger also below there. So on the downside. So this is a good sign for us. And yeah, if you're working with this, so as I mentioned before, so the swing trading levels is not only for swing traders. I think every trader who's maybe a day trader, is a scalper, swing trader, or an investor, they should use this to find for himself, also for based on the swing trading levels, good entry points and exit points, and where he have to be aware where we can have possible strong pullbacks or something like this. So the swing trading models is one of my preparation, what I'm doing every day. I have every day the swing trading levels also on my chart. I'm trading most of the time the NQ. And what I'm doing is I'm plotting the QQQ levels and the X levels for swing trading on my NQ chart. I take it out after this, but I know exactly where they are. And this is so important and very helpful.
Yeah, absolutely. And we have a question actually on So basically, the models are actually coming from our bot. So this would be the chart that you see, but then we can also translate those levels right here into a TradingView input that you can then put in the chart. And if you want to learn about the swing model, if you create a free account, we actually have an academy course right here just for swing trading. So if you click here, these are all the videos that will show you basically how to use the model. But in essence, what we are trying to do is we are trying to give you a 5 days or 20 days volatility band with also a directional bias. So the idea is using options data and options model to actually allow you to understand, okay, based on the option data, are we in a bullish or bearish bias? So in order to get that, you can see if you have a red upper band right here, you can clearly see we are in a bearish bias. If you had like a lower band, for example, in the case of Google, in this case, we have our bullish bias right here. So in this case, we see our lower band, we see our risk trigger, and the risk trigger is really a 5 days or 20-day upper band or lower volatility band. But the reason why we don't use it, for example, in the calculation of the success of the model is because the model also tries to forecast the direction. So if we are able to forecast the direction, then it is most likely common that this risk trigger might be broken, like in the case, for example, of Google, what happened a couple of days ago. So the goal of this model is really to give you those areas where there could be an increased volatility. So the risk trigger can become a volatility area where there could be like an inflection point, and our lower band is really planning to tell you, okay, there's a high chance that the price will stay above this level over the next 5 days, and you see the success rate right here.
And we will cover this also in the live trading session. So we will start on Monday with our swing trading levels. We will speak 100% about this, and we cover the stocks, we cover the ETFs, we cover everything to get prepared. This will be 100% something what we're covering also.
Yeah. Yeah, absolutely. And again, you can ask, those level anytime for any stocks that you cover, and you can do the same exercise. But the goal of this was really to show you, okay, how can this work? Obviously, earnings, some people consider them like a coin flip. It could go either direction. So that this week was actually a very good example to show, okay, let's see what happens if we have good earnings or bad earnings, and let's see how the models could have worked. So I think it was a very good exercise. So that's a good question, Suraj. So the risk trigger, consider it as a target for sure, but also could be an inflection point, because as we said, the goal of these levels is really to not only give you the volatility of that time frame, but also give you the direction. So if we are good enough at being able to predict the direction, then it could be that, especially if we go back to, let's take Google as an example. In this case, we see that obviously the earnings went well, and the price kind of like breached the risk trigger level of 182. So again, that could have been a good target area, as well as a potential inflection point. So obviously we see the price kind of like rejecting this area right here and then going back down, even though the earnings were very positive at the beginning of the week.
But Surai, is the risk trigger a profit target when long? And Anna was also giving some comment. It's hard to predict the target. It's easier to say it won't go in any lower or higher. Yes, I would say it's really depend based on your A plus setup. And when we're speaking about the risk trigger levels, lower bands and upper bands, so what we're doing with Mentor Q is we want to help you. We're giving you the data to make it as easy as possible for you to read the market, and that you can put this in your A plus setup. If your A plus setup, Surrey, is targeting the risk trigger because it's matched also your A plus setup, what you see on your on your screen or on your chart, yeah, then this could be a target. Why not? And the same what Anna is saying, it could be also possible, Anna. It's 100% true what you say. So every trader is individual. So we need in the market winners and we need in the market losers. So that's the game. But I say to you, let's trade the A plus setup, where you be 100% or 90%, 80% most of the time successful with. And then look into the data from MentorQ, what we provide you, and see if this will be fit your A plus setup. And if you're looking for a target, if you be now long and you're looking for a target, yes, the risk trigger could be a target. It could be also for taking partials. So if you want, in this example, we have now Google. If you want target 184, then you have the risk trigger 1025, 1029, 1031, and 1030. This could be always targets for partial profits. So only as an idea. So
Yeah.
it's really individual. So there's no right and there's no wrong.
Yeah. And then another good question. So how far does the backtest data goes? So if we go back here on the chart, we show the last probably 38 to 40 days. So here you see that it's a rolling window. And the reason is really that it's hard to put more candles in the chart, right? So we have data going back since July. On this, we launched this model in July. But on the chart, you only see the last kind of like 2 months of data because it wouldn't fit otherwise in the chart. So what you see here is you see here, for example, you see the shift is shifted 5 days. So this level right here would have been the lower band that you received at the beginning of the session here, and then going forward, you receive every day. This is the level for today, and this is how they played out historically. So, for example, this level right here, you would have received it 5 days before, and as a result, the price closed above this area right here. So what we do consider a success is the model success is only considering the upper band and the lower band. We don't consider the risk trigger in the model success, but we also provide you the risk trigger success rate right here. So how many times does the price close below the risk trigger on this 38 days? 84% of the time. For us, the success would be if a lower band is available, then how many times does the price 5 days in the future or 20 days in the future close above the lower band? And if we have an upper band, then how many times in the future does the price close below the upper band? So in the case of Ford, the price kind of went down, so close below the lower band of 1174. So in this case, we have a 92% success rate of the swing model. Here we had a lower band and an upper band. So you see here we have a lower band and here we have an upper band. So the model calculates the success rate based on those two. And then obviously the risk trigger had only a 26% success rate.
But Fabio, maybe I remind myself always. You was talking about some story about your financial background. And can you give us the story again for the people who don't know it? How hedge funds using the data, and then maybe make the bridge. What we deliver the people, and that they get an idea how hedge funds using data and how you can use data. I think this is a really powerful story, and I think everyone should be aware of this, how the big players using data and how you can using data. And it's so important why you should be used the full power of MentorQ. But go ahead with the story.
Yeah, absolutely. So I obviously used to sell data to large funds. I started my career at Bloomberg back in 2007, and then I was managing the sales division of a startup that was actually selling alternative data to large hedge funds. And that's when we really started to develop kind of this interest in actually building technology that could actually simplify data for any day trader, because basically the way obviously the institutions are using data is becoming more and more powerful. So the kind of data that they look for is no longer only pricing data or like news data or fundamental data, right? They are looking at any kind of data sources that can help them generate additional signals for their strategies. So some of this data might involve, I'll give you some example, credit card information. So there are companies that are selling credit card data so that people can forecast how much revenue can Amazon do ahead of earnings based on the credit card information, or geolocation data, right? Satellite information. So how many cars are driving through Macy's on any given period. So you can forecast if the traffic is diminishing, then maybe less people are going to buy at those locations, and therefore these are the earnings of this company could be impacted. So yeah, there are any very large type of data companies that are trying to provide additional signals for a trading strategy. And obviously, as a retail investor, it's very hard to do. So with MentorQ, what we're trying to do is use a similar approach where we try to simplify complex data sets and provide you with actionable insights. And obviously, the output is really very, very easy. As a trader, lines on a chart, they carry on the power of data, but they're very, very simple to understand, and they're there in your chart for you to make quick decision.
Exactly. And this is Suraj and Emma, why there's no right and there's no wrong. It's all about you, how you interpret the data, how you use the data. And maybe think about you being hedge fund, or you being you have a big amount under your assessed, and how you would be approach this. And then MentorQ can deliver you really powerful data. But at the end, you have to execute based on your experience, based on your setups, based on your risk management, based on your capital. And this is really important to understand. And thank you again, Fabio, for the story. I have this every day in my mind, by the way.
Yeah, I mean, it's very powerful, and it's kind of like mind blowing when I went through that experience, because it's really interesting to understand like how any data that we come across could actually become an insight for a potential trading signal. So I think, yeah, there's a lot of information out there that is hard to capture. So we are trying to bridge that gap where can we get access to that data, and can we build models that can help you as a trader. Yeah.
And by the way, since you was telling me this story about how they're using the data, so the big guys, we're speaking about really big guys, every time when I review my trades with the journal, so no matter if I be losing or if I be winning, I ask myself, did I miss something? What information I miss? And then I review. So now we have the options with the levels that we can use, also the previous levels on your chart. And then I review everything and I say, man, what I was missing. I go into options matrix. Did I miss maybe the change in the DAX and in the GAX, or what was in the news? Was there something what I'm missing? I will have the mindset from the big guys. So was there an information for my future trading, what I could be possible add to this, so that I'm not getting involved in maybe this loss again, or did I not losing so much profit on the table? So this is why it's so important to follow the one-day max, the one-day min on daily basis. This is why it's so important have the swing trading levels to that you don't let profits on the table, so that you can say to yourself, okay, I take partial profits, I let it run, I let my profits run, I get a better risk reward. So that's the point. That's the whole point.
Yeah.
All
Absolutely.
right.
All right, let's see if we have more questions. Question about backtesting data. So we have data going back since July, but we will also as our next plan for 2025, we will have more history, and we will actually build more backtesting results. So we are actually working on an internal backtester right now as well, that will be released next year. Right now, just to give you some roadmap item as well, I think it's important. At the end of the month, we're actually going to release our intraday gamma levels for stocks, ETFs, and indices. So those will update throughout the day. So that's going to help us really on earnings releases or events, like how does the Jackson, Gamma, and Delta change throughout the day, and how can that become an insight for you guys. So very excited about that. It will be released at the end of the month, 29th of November. So we are very, very, very excited about that. That should be a very, very big thing for us. Let's see if we get more questions. So to recap, obviously, for those who have not yet, they have connected later. Next week, we'll be running a live trading event. It will be myself and Patrick working on that. We'll be live with you guys for over 10 hours. And this is the schedule. We will start on Monday all the way through Thursday. So we will trade during the election results. We will also be trading during the FOMC meetings, and we'll also be doing some recap, learning, and Q&A will also be available. So you guys will be able to chat with us, send us your message, and it will be like a really good opportunity to learn everything together and show how a professional trader like Patrick actually goes live into the market and how he applies his skills using the MentorQ data. So I'm just going to post the link to the event here. Again, if you want to be part of that, you will need to have access to the Premium Academy. The Premium Academy is right here. We have a link already created with all the live streams already set up. So here you'll be able to kind of like join and watch the event live next week.
And I think everyone who knows me in the community, we will always over-delivering, Fabio. I'm 100% sure on November 4th, 5th, 6th, 7th, we're doing also some special session after the end. Maybe we're making a new online course after this. Maybe we was learning so crazy things together, and we're speaking 1 hour more about this. Maybe we're making a really deep dive Q&A. We were speaking about your trades. Maybe we review your trades. No matter what, really insane. I think so. My will be really dolce vita to be 100% clear in my mind and fit for the next week.
Yeah. Yeah, and I just left the link, guys. So if you want to join us, you can sign up there. We also have our discount coupon code for the event. So you use US 2024, and then everything will be streamed. Also, recordings will be available, so you'll be able to access the recording and all the courses at any time. So even if you cannot attend all the sessions, you'll always have the recording back as well. So yeah, this one would be a really good one. It's going to be a very volatile week. There's a lot of events, a lot of things happening. So I think it's a very, very good opportunity to showcase how the data could actually help you during those volatile periods. And then obviously, Patrick, the pressure is on you for next week.
There's no pressure. So I don't see it as a one-man show. So as I said before, I'm not the clown for all of you who's on the front. So we are a team. So at the end, I won't be, and I can repeat this, I won't be that we as a team, at the end of the week, everyone should be saying, hey, this was an amazing session. Maybe someone was doing an amazing profit. Maybe someone was having a crazy day and he was learning so much about MentorQ. The other one was learning how to become more patient. The other one was learning how to handle the risk much better. The other one was seeing, okay, when to go into market, how we using the levels when we approach call resistance, put support, high wall. There will be so many opportunities. We are a group. I understand us that we will be working as a group. There's again no one-man show. If you have any questions at any time and I'm not in a trade, we will be there to ask any questions. It's live in the market.
Yeah.
We get also one question, and I think This is a good question. Curious B0. How do you set up the levels in TV for the futures? If you mean the swing trading levels, you can use easily the ETF. So for the Dow Jones JM, you can use DL. For GZ, GLD. For CL, you can use USO, and so on, so on, so on. QQQ, SPY, IBM, and all the other ones.
Yeah. All right. Yeah, thank you. Thank you, guys. I think this was a very good session. I'm going to share, we're going to publish a blog post on our website. So if you want to access all our documentation, just create a free account. You can do that by doing this. You get access to a lot of the tools here. So if we go back to our account dashboard, so first, you can access all our free academy courses that are available for you right there. And then you can also access our guides. So within our guides, we're going to produce this documentation. It's going to be under a swing trading model. But if you also go under gamma levels, we also have already some backtesting results of our one-day max, one-day minimum indicator right there. And that you can look, and then obviously access all the documentation that we have. So we have over 150 documents right there. So a lot of information for you to consume. It's all available for free. Just create an account and you'll get access to this as well as the free academy. So I think it is over 10 courses that you have, over 80 or 90 lessons right there. If you want to learn about blind spots, if you want to learn about gamma levels, we have a course right there. So we show you how to use our core resistance, our put support, our high vol level. So we did like a very big session last week on those. Very good insights there. It's all available for you guys. So yeah, just create a free account and join us.
Yeah, and Fabio, can you go to Meinhe's comment? This is a game changer. Valve looking into building a portfolio with swing trading. Thank you. 19. So Minhas, so yeah, this is a really a good game changer. And just as a reminder, we was live, I think, for 2 weeks. Someone was using the Screamer and he was building his portfolio with the Screamer. I think you can do the same also with the swing trading levels and can set up your portfolio also with this. So yeah, you're right. So there are good opportunities. And if your broker supports something like that, you can build a portfolio, then yeah, let's go, or a basket. So then I think this could be also a really nice opportunity.
Yeah, and I think if you go under our option screeners right here, last week, a couple of weeks ago, actually, as Patrick mentioned, one of our users, actually, Simon, showed us how he's basically using our option screener to create equally weighted baskets that he trades through like Fidelity or any other brokers. So here it shows you really how to use it. There's a video right there. You can access it. So very, very good insights there. And yeah, the swing model, again, Patrick, absolutely. This was just really a test to show you how this can be applied for earnings. Obviously, earnings are very volatile moments. So, but it was a good, really use case. So we want to really stress it out. This was a great week. Lots of good earnings. We looked at the model like performed. So we're very excited about that.
Yeah.
All right. So I think, yeah, I think, so everybody, thank you so much for your time. We have really a lot of people on a Friday. Again, please join us for the event next week. And if you have any questions, as always, send us an email. If you have any questions about the event, if you have any questions about the swing models, just send us an email, info@mentorq.com, or join us on our Discord for free right here and create an account. And then we'll see you next week.
All right. See you, my friends.
Thank
Bye-bye.
you. Bye-bye.